Hello folks. Great to have you here today. Do me a favor, make sure you all go ahead and read through the disclaimer. It's been up there for a while, so I know you probably already have had an opportunity to do that. That being said, this is of course for educational purposes only, so please be aware of that. Most appreciated. We'll go ahead and get out to the charts, and we'll see what we see. Try to have a little bit of fun and and do some software training. Yes. Okay, so I'm going to switch up the sharing here. Go ahead and get you out to the charts, like I said. Okay, there we go. All right, excellent. Okay, so like I said, we're going to do some software training today. I'm going to recap. As always, I'll kind of recap what we discussed yesterday, and if there's any questions or what have you, do please let me know. So as always, and at any time, just always understand, and you're welcome to take a look right here. So any trades that we place will be, as always, done in simulation in real time. You can see, always keep track of that right there. Okay. That's one of the benefits. Let me explain that real quick as I just touched on it. But you know because of the kind of, what do you want to call it? The technology, you know, or just advanced features, things to that extent. Having multiple options of submitting and you know, order management and so on and so forth. I always wanted to be aware of, you know, what account I'm submitting to and things like that. And you know, you have the chart trader and so on, but I just wanted to be aware of that. So what I ended up doing is I said, you know, let's just put it on the label. That way, I know, you know, not only that, but I know everything there is to know about it. So for example, up here in the top left, we'll note that there's two different icons, right? If I hover my mouse over that right there, the left, it's going to be called the primary entry menu. It tells me then the market as well as the account that any order from said menu would be submitted to. If I hovered over here, notice that says secondary entry menu, and the market is as well different. So it says in this case the MES 1222. Actually, you know, I would want to change that. Okay, let me explain why. We just went through the contract rollover, and therefore any trades that I submit at this point, I would have the preference that they're on the front running contract, as this will be set to expire. So if I wanted to have a swing trade, for example, maybe I wanted to hold it for a week up to however, you know, a month or what have you. Maybe I just wanted to hold it overnight, I don't know, but ultimately let's say that I had the potential to hold it for a week or two. Well, the issue then becomes I can't do that because I'm going to have a contract expiration. So that would be very problematic. I just wanted to make you all aware of that. One of the great things Ninja's done, among many, but they do let you know now when you open up the platform and so on, there's this little dialog box that pops up, and it gives you the option. It says, hey, you know, essentially rollover has taken place, and you can check, you've seen it, right? All of you have probably seen it as using Ninja, but you can just apply all, or you can check individual markets, but you can then take and click OK, and what it will do is automatically roll over, you know, your contracts. So where would that be an issue? If you were in a position, okay, or let me say myself. So if I were in a position in, for all intents and purposes, the E-mini December contract, the S&P E-mini, that's ES ticker symbol, and if I were in a position in the December contract, I would certainly not want to exercise that option of rolling over the contracts when I start my platform up, because if that happens, I'm not going to see my order anymore, right? My filled order, and then I'm going to be confused. So I'm going to be thinking, uh-oh, you know, I know that I was in a position. Did my broker close it out? Did I mess up somehow? Something like that. There, you know, you don't want those issues to arise. So I think that would probably be about the only case. For the most part, I pretty much always just go ahead and update all of my contracts. Again, just to repeat, the only time I don't would be if I'm in an active position. But in this case, as I just noticed, right, So this is what I would do myself. I would double check everything I do. Double, triple, quadruple check, right? I mean, it's just something I think is a good good idea, a good practice, if you will. So that's why I'll go do this. But more importantly, going back to what I was saying before, everything is right here, because let's think about that for just a moment. And this is not what we're really here to talk about per se, but it is pertaining to the software and its advanced features, and things like that. So it makes sense. We'll kind of cover it real quick. Just that simple little thing that I just talked about, though, right? A lot of us have probably had that issue, I would imagine, in the past. Oops, uh-oh, look at what I did. I don't know where my order is, or what have you. It could be, there's a plethora of issues that we could go through that I could forget or not be aware or this or that. You know what I mean? So I don't want to have those issues, and quite frankly, if, probably such as many of yourselves, there's a lot of things going on at all times. I mean, I'm dealing with maybe it's emails, or maybe it's phone calls, or maybe it's, yard work. I don't know. I mean, there's 50 million things, right? And so we're always kind of doing something, and our minds become occupied. I don't want the issue of not being able to just automatically know everything, about my trade and so on. So again, what I did, I'm going to say, when I say what I did, I should say what we did. Ultimately, I kind of come up with the information. We have our magician who actually executes that in code and so on. But suffice to say, we implemented these different informational pieces, if you will. So this right here is referencing the contractor shares, the amount thereof. So if I were to, well, this order is submitted, obviously, but if I were to submit a new order, I could alter this, and I'll show you that in a moment. I can make that number whatever I want. If I want to trade one E-mini contract, I'm already done. I've already done that, of course. I could add to the position. Those are other bells and whistles. But the point here is that it's just telling me how many contracts this order label is going to handle. Okay? I then know if this is a long or short position, or at least if I'm attempting to put on a long or short position. So in this case, this is a bracket order, right? So here's the entry. This is the stop, trigger line, and target. We can have multiple targets, but in this case, I just opted for one, as I usually do. You can show that if you like, but again, just understand that we can have two more targets up here if desired. Now, beyond that, this being a bracket order, obviously this is not a buy order, okay? But it's a bracket order on a long position. So this is referencing currently the position in and of itself, not so much the absolute order that is going to be there. So think about it this way. If I'm in a long position right now, this has to be a sell order, right? That's how we close it out. So it has to be a sell order. So, but again, the nomenclature there is just referencing to the position in and of itself, so that I know, hey, this bracket order is going to control what happens inside of this long position, right? If I were to go up here and say put on a sell, okay, I could do that. This is going to be from my secondary menu. Now, please remember what I said just a little bit ago. Oops, right? So if I don't have this information on my chart, I may have already made the mistake of submitting it to the previous or prior contract. It wouldn't be a problem today. I could still trade the December contract. But as I said, it is, it's set to expire soon, and it's already rolled over. So that's a full discussion in itself, how we handle rollover versus expiration, and the volume, let's call it the transition or shift of volume from one to the other. I would strongly encourage you to look into that, because it definitely is impactful. But what I've found is on these markets, we're talking the most heavily traded market probably in the world. I mean, it's, the S&P 500, it is very well traded. I've never had a problem, with order fills or anything like that. So just to throw that out there, but it's something that we would want to be aware of, right? And when you're transitioning during the rollover to expiration period, there is that. So imagine it like this. A lot of people say, I just want to go ahead and get in that new contract. Okay. And then maybe the other half or what have you say, no, I want to stay in this because I believe that, meaning the prior contract or the current contract, if you will, I want to stay in this one because I believe that there's going to be more volume traded here. So look, if you're trading, 1,000 contracts a time, maybe that is an issue, right? But otherwise, I mean, let's say up to about 100 contracts. This is only my personal opinion. Nothing less, nothing more. But I certainly feel that it's not an issue if I'm not trading more than that. So anyway, again, today it wouldn't be an issue, but I do want to be aware because let's look at what's happening right here. Down here, I've submitted an order on the front-running contract. Okay, that's the E-mini S&P March of 2023 contract. But up here, I'm saying on my secondary, we call this the hedger or secondary menu, right? So if I want to submit, let's say I wanted to hedge against this position on another market, right? Maybe I want to, in this case, you can just see what's happening here. We have a long position on the ES and would be taking a hedge or a short position on the micro ES. So it's a totally different market. You can't hedge the same market. Okay, you don't want to do that. But anyway, that's what's happening here. We want to be aware of it. We obviously need the price and then of course the account. Now, this RR, what you're seeing here, I'll explain this really quickly. You're going to see the currency value in the first block, and in the second block, the RR, it's just a tick or pip, if you will. It depends on your trade, whatever you want to call them, but let's just stick with tick. So this is a 28 tick. From the entry to the stop is 28 ticks. That is equivalent to $350. Okay. So if I were to have the multiplier on the S&P of $12.50 times 28, it's just doing the math for me, which again, if we're occupied and we're busy doing things, I just don't have time to sit here and do this, which is amazing, right? It is unreal. I'm only talking about myself, but I am very hard on myself. And if you think about what all this technology has done for I'm joking, halfway joking when I say this, because it's helped in so many ways. It does, but there are definitely ways that it's been a hindrance too. For example, think about our memory. I know, haha, he's being silly or whatnot, but think about this. How many phone numbers do you have stored in your brain right now? How many people's phone number can you actually remember that you would actually be able to tell me if I ask you right now? A friend, family, I mean, I bet you that there's a good bit of people in this room that literally don't even know their own, parents or spouses' numbers, right? I mean, think about it. Why? Because I can pick up a device and I can hold down a button. I can tell it to do whatever I want it to do, right? So I don't really need it's technology. It's maybe taking away some of our requirements for memorization, things like that. But then here we are, kind of doing the same thing with this type of technology. I'm joking around about the whole like lazy mental mentality thing, because here I am saying, oh, I just don't have the time to do a simple mathematical not even an equation, just a math problem. So that is a joke. Of course, we have all the time in the world to do what we need to do, but why do that when we can use the same technology to advance our efficiency, right? So now, instead of having to overthink that and just take a moment to sit here and do a little calculation of 28 times $12.50, etc., I just know it automatically, and I know what my maximum risk is. So I mean, that's something that we all know. If I know I want to go buy a TV, I know I'm willing to pay $1,000, no more. There's no reason for it. I can get a 70-inch these days, smart TV, whatever. I'm just giving random numbers, but point is I dictate a price value. So we can do the same thing here. I can dictate in my mind what's in my trade plan, rather, is the better way to go about that. But I have, for all intents and purposes, $1,000 maximum risk. That's just what I know. Well, again, I don't have to think about that now. I don't need to do the math and go, well, where does that put me? Is it 40, 30? Is it 40-20, 40-24, 50? Like, where is that? I don't know. Well, now all I have to do is drag a little label, and it tells me exactly where that risk tolerance lies. Now, that's not how I personally would go about placing a trade. Of course, I don't just always use some fixed number. If anything, I do the exact opposite. I'm not a fan of fixed number, fixed anything really for the most part in trading, because it is anything but. The markets are extraordinarily dynamic. They're always moving. Volatility is getting larger and smaller, it's contracting, and so on and so forth. So I'm not saying that I would do that. I'm simply saying for efficiency and time purposes, it is doing the work for me. Okay, so let's look at what I did this morning. We just did a real run through real quick of the labels. You kind of understand what's on them. So remember, we have the only one that's a little different, I should have stated this, is the TL, right? And so that never changes. If I were to up my contracts, you're still just going to see TL here, because all that's doing is controlling when my stop moves up to break even plus commissions. So for example, if I drag this down now, and let's say current price touches this line, okay, what's going to happen is the stop is automatically going to move up to break even plus commissions, because that's what I asked it to do. I can disable this. I don't have to have it, of course. Any of that can be accomplished. I can set everything I've said thus far and will say. For the most part, almost all of it can be altered, even down to the color of the labels. I mean, we can remove the risk and reward values if we wanted to, if I just want to clean up the label. And I don't care about that. Honestly, to me, I know this seems silly, but this is of the utmost importance. Just because, like I said, I don't want to go do the math if I don't have to. I love math, huge fan of it. It's always my favorite subject, but doesn't mean that I want to have to just consistently do math in my head if I have other things to do, right? So I want it there, may be different for someone else. All of this can be changed, as I said, from the settings. But anyway, let's just talk about the features and functionality, for now. Hold on one second. Let me get some comments, or a comment, I believe. Yes, I'm glad to have you here. Absolutely. And thank you for the good mornings. That is most appreciated. It absolutely is. It's funny you say that about the phone numbers. I still remember dozens of them from the last 20 years. He was kind of laughing as a joke. People always said that I have a photographic memory. Well, apparently you do. If you could remember all the numbers over the past 20 years that you've, somewhat stored, that is impressive, sir. Yeah. Can you show us the primary zone setting in the chart you're using for the SP3 minute? Okay, so hold on. The primary zone. Oh, yeah, sure. Just, you mean like bring up the settings? Yeah, for sure. Well, no, actually, I apologize. I cannot. I will do that, but I can't do it on this chart. Let me explain why really quick, because this is something about the software. When I have an active position here, essentially I'm disabled now, right? So I can't, think about it, it's a security measure. So if I go, making changes, the way that NinjaTrader's architecture works is any change that I make in the settings, I have to apply those changes, right? So when I hit that apply button, it reloads. Their architecture essentially reloads the chart's data, and therefore it recalculates everything, okay? So I don't want that to happen, because then I would lose my, my calculations, right? So yeah, let me show that to you, but I'm going to do it on a different chart, okay? I'm just going to pop over here to the same market, everything, 60-minute. Again, it's just a different chart. Yeah. Okay, so if I look at the primary, this is what you wanted to see. Is that correct? Just let me know if there's if there's something that I'm missing, or if you wanted to see something different. Okay. Do you have what you need, or do you want me to leave this up for a second, or? Okay. Yep. You're very welcome. And if any of you have any questions about this, you do let me know, please. I mean, there's, lots of settings here, but basically this controls everything about the zones in and of themselves. So as you may or may not know, the PFAZoneSuite is that's why we named it a suite, if you will, because it's a plethora of tools. It's not just zones. It's essentially everything we need within the methodology. Okay, and that's why we've put certain bells and whistles and features continuously because we need them, right? Or at least we want, or at least we want them. Need is a very strong word. So let's get to it. I did this morning hoping that, oh good, maybe it'll happen right before the session starts and whatnot, but it's okay. It happened a little bit ahead of time, but that, it's what it is. I want to do it in the room, though. That's the point that I'm trying to make, so that you can see how everything is done. So I guess right now here, let's do something like this. What I could do is either go do it on a different, nope, there you go, there's an RBR, so I'll just kind of put it up right here. So right now what I'm going to do, all right, is I'm going to go ahead and move my trigger line down. And you saw what I mentioned a moment ago, okay, which I told you that the stop would move to break even plus commissions. So what this did is move 2 ticks in favor. Well, that's not just, 1 tick, Will. How is that? So there again, as I was mentioning moments ago, it is, you can alter it in the settings, okay? So if I go back over there and show you, that there's so many little things, I'm not going to spend too much time opening and closing the setting. Just, take me at my word right now, only pertaining to the software, when I tell you that for the most part anything that I'm talking about can be altered. Anyway, I'll show you this one real quick and then we can be done with that. This is the primary order. I submitted it from the primary menu. If I go to the primary orders here, and then I can look at all of this information down towards the bottom, you'll see that at a 2-to-1, this is a multiplier. So whatever my stop to entry is, multiply it by this number. So I basically had a 2-to-1 initially printed. I manually moved it, etc. And where does it go? 2 ticks. So it offsets it by 2 ticks, right? I could put 20 there if I wanted to. I could put 1 or what have you. But what that is controlling is this right here, okay? So when it moved the stop up, instead of moving it just 1 tick, it moved it 2 because that's what I told it to do. So in different terminology, that is what I constitute plus commissions. Okay, that's where I feel that it's good for me because, especially if I'm using market orders, from time to time there may be a tick of slippage, of course, right? So instead of just giving it that 1, I want to go ahead and give it 2 ticks, just for a tick of slippage, And if there is no slippage, well, great. I just made $12, hypothetically, in simulation and whatnot, $12.50 per tick per contract, right? Okay. So I figured that this would get stopped out relatively. I thought it would already have gotten stopped out, but that's okay. Let's see if this is going to hit that stop really fast, and then I'll start to walk through the features. And let me make sure that I didn't miss anything. Okay. All right. Excellent. Looks like I didn't. Okay. Or better yet, let's not sit here in silence. Let's go ahead and just close this position, okay? And then what I'm going to do, I just moved the order, the stop order up. It closed out the position. So now I can reevaluate, do whatever it is that I need to do. That RBR unfortunately disappeared, but it will help me to show you how it functions anyway. Let's hypothetically say I want to be the buyer today. For whatever reason, my analysis is deemed demand or buy side of the market to be more sufficient. In such a case, my execution method, which we use PFA methodology and so on, it really only has 2. I mean, it's not rocket science. We try to keep it pretty simple. We're either going to utilize a confirmation entry of sorts, which is what we call the RBRs and DVDs. And then the second is, of course, the zones in and of themselves. Like I, for example, could submit a limit order right into this level, which is exactly what we would have done if in real time, given the fact that this is, well, it's an SOM, it's a SOM, shift of momentum type of setup, but we won't go into that today. It's anyway, point is I could have just used the level, put a limit order in it. I could do it directly from the zone. So that way we have all of this, capability directly from the zone. I can go here, toggle that on or off. I can do different things. TF stands for trend following, CT for counter trend, and so on. But again, those are just different options to submit orders from the zone. Conversely, I don't maybe want to just use set and forget orders. Maybe I want to confirm those. Okay, so that's what we're going to do today. We're going to focus on this right here. Number one, I'm going to go, actually, you know what, while I have, here we go. While I have this opportunity, meaning I don't have an order right now, a position, I'm going to go make that change, right? Remember what I told you? I needed to change this to the front-running contract. So I'm going to go ahead and apply this, and actually I can save this into my template so that I don't have, like now if I save it into my template, I can go to other charts and load that, and it will load here. By template, I don't mean NinjaTrader templates. We actually had to develop our own custom templates, given the amount of information and features and functionality kind of all built in. It was just too much to handle. So we have a custom template system. So right now what I'm going to do is I'm going to go ahead and save this. Trying to think if alright, so we've got the default. This is going to go to the default instrument. This one's going to go to the hedge instrument, trigger lines. We can switch this to market orders if we want. Yes. Okay. So now I'm going to go here and I'm going to save this template. And again, like I said, this is our custom user interface, and this is how we save templates. They get stored in the back end in your NinjaTrader 8 folder. That's where they go. So I'm going to go here and note that I have a bunch of different templates which I can make alterations to if I want. Okay. But I'm going to go here and I'm going to select the PFAZoneSuite default because that's just the template that I want to save. Okay. And then I'm going to save that. Now I'm going to click apply, and notice what has now happened. If I go up here, we still have that E-mini, the S&P E-mini, and that was the March contract, but now notice this one, also the March contract. So I could go at this point to any other chart. I could load that ZoneSuite default template, and I'm going to get exactly what you see here right now. Okay? All right. So here's what I want to do. Again, going back to the hypothetical of maybe I've said that I wanted to be the buyer today. Conversely, like I said, I looking for sell orders today or what have you. It's okay either way. Whatever my analysis has told me to do, then I can go do it, right? So for the way that we do it, as you know, we get into the proper location. Only at that time is when I begin executing. So I'm really not going to pay attention to the small time frame, whatever that may be, at all until the larger time frame has told me to do so. But in this situation here, let's say, what do you all have the preference of? I'm just going to take the first thing that first answer that pops up. Do you want to be on the buy side or the sell side today? All right, the buy side it is. And by the way, the question of how do you delete a template, I'll show you that real quick before I do this, because remember, I won't be able to open this window once I submit an order. So you would go here and click load template and then just select it, right? So if I want to delete that one, then just click delete. So it's on the load side, not the save side, right? So just go there, try to load a template, select it, click delete, and that template is removed. You can remove all of them, one of them, you get the picture. All right, so we've decided today we are the buyers, right? Now, of course, as I said, I have multiple options. Here I could go directly enter from the zone, but we're going to utilize, if you will, today, the primary and secondary menu. And this is honestly what I use almost every single time I place a trade, right? I don't know why, I just find it to be so efficient. So I'm going to go here, all right, and now I'm going to ask myself, what type of entry do I want to take? Do I want to take just a standard buy position? Do I want to confirm the entry? And there's two different types of entries, but it's a method of confirming, if you will. The first of which is the RBR, and then you have an up bar. So what the difference is, the RBR is going to look for that green hash mark, right? By the way, you can see the level of accuracy with the zones. Just watch this in real time. You'll see this throughout the remainder of the day. By the way, the markets are opening right now. Don't worry, we're not in any jeopardy of missing a trade because there's no RBR, which is what I'll be submitting. But suffice to say, the RBR is going to wait and look for that green hash mark. The DBD is the one on the downside. I don't know how well you can see this, but it is red. So if I open this up, you should be able to see, unless you're, you know, depending on your monitor or whatnot. But the ones on the upside of the bars, those are green. That's the ones we call RBR. The one on the downside of the bars are red. Those are the ones we call DBDs. Okay. All right, so I want to confirm a long entry. By the way, I will show you, I forgot to do the recap as what we discussed yesterday, but we should do that because currently the long position would have come in right there, right? So remember from yesterday, I'll show you and we'll go back because you had to do it, rinse and repeat on that one. But if we were following along from yesterday, the long entry came in right there, okay? So it'd be long from here, holding for price to potentially go much higher. All right, and again, we'll come back to that in just a moment and do a bit of a recap on it, but we'll see how the day goes. Remember, the Fed is out today, folks, so we better keep a close eye. And also, one other thing, as I'm about to submit this order, I'm sorry, my mind works a mile a minute. Sometimes it can be all over the place, but it's information I think can be advantageous. Please check with your broker if, now nothing we do, because remember, as I said, this is all, everything we do, it has to be, you know, we're prohibited otherwise, but we're going to always function in a simulated environment, right? You can treat that however you like, but ultimately that's what it is, and that's how we run the room, okay, in our training and so on. So nothing we say can be misconstrued as advice of any kind. You get the picture. You understand this is all for educational purposes, right? If, however, you decided at your own accord to go, maybe you've been trading for 20 years, plenty of you have, I know, or whatever. Point is, if you are going to go trade your live funds, I would just strongly encourage you to touch base with your broker today to see if they are or are not going to affect your margin requirements. Okay, this is a very common thing, and I know that I've noticed that the volatility is so extensive, they've been doing this more frequently. Okay, so check with your broker perhaps if that's a concern for you. Maybe you might want to consider that. As I said, I don't know if you are following what I'm saying, but essentially from time to time, given the fact that the Fed is coming out today and they know that there's likely to be extreme volatility, I better get on the ball with this real quick, they are likely to increase their margin requirements, and that discourages people from going out and placing tons of, you know, contracts and trades and so on that they usually would be able to do because they're trying to protect you ultimately. Okay? All right. So now, real quick, I'm going to submit that RBR. What it's going to do is start looking for an RBR to print. Okay? Now, it's not doing anything right now. Okay, and also it's going to snap back because I told it to be on an RBR. So what that currently does is follows the high of the prior bar. So whenever this new bar closes, it will adjust to that one because ultimately that's where an RBR is always going to be. Remember, it's always going to be at the top of a bar. So we're going to eventually maybe get an RBR up here. We'll print on the high of the bar. We have to then begin counting bars. If you want education on that and how we do that, if you'll just take a look at our YouTube channel, there's a video there that teaches all about RBRs and DVDs and then how we count the bars, things like that. Okay? But just keep an eye because down here you can see I have a timer set. And we have 1 minute and 34 seconds until this bar closes, at which time you'll see that this label then adjusts accordingly. All right, so now, okay, I have my order. Remember, I haven't submitted it, okay? But my order is on the chart. Now what I want to do is say, you know what, I'm willing to take that, and I want to take a long position, but I'm only willing to go so far, right? I mean, I got to get my entry, and I need to be able to determine where my stop is going to be. We have this beautiful, and you know, it's my opinion here, but this has been so useful. It's new technology that we've implemented. I am beyond excited about it. I think you'll understand why here just momentarily. But what this does is defines an area that I'm willing to take a trade. Now, I suppose one could think about a supply or demand zone in that way, right? But that's simply for execution purposes. We're going way beyond that. What we're saying is, yeah, still we want to refine our entries and we're willing to trade either our confirmation or our levels or whatever our entry method is, but I'm only willing to take my execution if it's within this desired area, okay? Now I'll go further in just a moment with how to adapt that, but let's look at this first. So if I said to myself, look, because you all told me let's be on the buy side today, I say, okay, great. But the question then becomes, where am I a willing buyer? Because if this thing just keeps rallying up, absolutely not, right? Because then I would be chasing a trade. I don't ever want to do that. So I use the structure. What I'm going to do is I'm going to drag this to the corresponding bar, right, that I want to utilize for my stop placement. So it can be here, but not worse. Then I need to define, well, how high am I willing to go when that RBR prints? So right now, let's say, excuse me, that an RBR printed on the top of this bar. Well, it is beyond the scope of my willingness, right? Meaning it's outside of my entry zone. So therefore, even if I submitted the trade, it wouldn't take it anyway, because it's saying, hey, well, you said, you know, absolutely take an RBR, but only take it if it's inside of this area. So we're setting a conditional behavior on the way that the order management functions, okay? But let's say, for example purposes here, that I'm willing to still take a long entry so long as the RBR occurs anywhere inside of this range that we're in right now, up to maybe the high that we've already put in, okay? So anywhere in that area, I'm willing to take the trade up based on an RBR, but if it goes beyond that without giving me the RBR, I'm done, okay? I'm no longer willing, a willing participant in the buy side. So what I'm going to do is quite simple. I'm simply going to drag my entry zone over that area, the entirety of it. So what I've now done is exactly what I set out to achieve. I have now said only take the RBR if you are at 4,072.50 or below. Now I have another choice to make if desired. Do I want to adapt the zone? So if we're a buyer, this is the way, think about this logically for just a moment. I love logical thinking, right? Don't we all? As traders, I imagine most of us probably think along those lines. But if we think from a logical standpoint, like a limit order is a beautiful thing because it is setting, or rather dictating, a price value. So if I put a limit order at 4,050 to buy, so that being a buy limit order, that means that I'm going to get filled at 4,050 or lower, right? It has to be. If it doesn't, then you have a real problem, and you need to perhaps, or rather I would contact my broker immediately and say, we have a major problem here, okay? Yeah, so that's the purpose in a limit order. It's going to sit on the exchange. You know how that works, okay? By the way, what you see right here, you see how that adapted? As I said before, what's happening is on the close of that bar, the entry just adapted to the high of that bar because it's counting the bars now, right? And it's waiting for an RBR to print. Inside of this area, the order then will execute. However, I have yet to submit the order, right? So maybe I should go do that. I'm going to submit. Everything is done. Now let's go back to what I was referring to, the adapt zone. Okay, so if I go back up here, I can see now that I have my adapt zone. Note that the menu looks a little bit different because what we're doing is trying to be extraordinarily user-friendly. I prefer that because what just makes life, you know, more simple. Meaning it's removed all of the other available entries because I have an active one currently, right? So if I'm over here and I have an active order, why in the world would I want to go, you know, make changes and all of that stuff to that? That's more of an issue for me, if anything. So again, we just say, hey, let's make that simple and easy. Let's just remove it. Okay, so if I go back here and I cancel this, you'll see that all of that is readily available once more. Okay. All right, so I'm going to go submit that, and now again I have concluded my order with the exception of the adapt zone, which I'm going to talk about in a second. But let's kind of repeat this. I've said now that the order is actually submitted, if I get an RBR, take it if inside of this shaded area. Else, don't execute that order. It's not worth it. It's beyond my willingness. Okay? So adapt the zone. If we go back to that logical thinking, what I was talking about before, as a limit order dictates a price or better, that's how we've implemented the function of the zone and or the adapt zone feature. So as you can see, I have that turned on. And what does that mean, Will? Well, we're in a buy position, right? So I want a better entry potentially, but not worse, which means that it's not going, the top of the entry zone is not going to go higher, because that would definitively be the opposite, right? It would be giving me a worse price value to buy at. I don't want to buy after a move up. I want to buy after a move down. Buy low and sell high, right? Conversely, what if price continues to drop? Well, maybe that's giving me a better opportunity, okay? So hypothetically, if I want to buy at 40.55 or better, well, I might, get an RBR. Price may just drop. Let's say the Fed. There's the RBR, by the way. It is within the entry zone, so we should execute that trade. So if price continues its decline or descent, let's say it gets down to 40.20, and then we've told the zone to adapt, it's going to continuously adapt to new lows as price declines. And it is going to drag the zone down until it meets our maximum risk tolerance. Remember earlier we talked about that? So we can set that max risk tolerance to whatever we want it to be. We can set it based on a currency, meaning what we call a dollar value in the settings, or we can set it based on the number of ticks. Either way, we can set a maximum number. So as price is adapting down, this zone is going to stop growing. So let's hypothetically we'll say that our risk tolerance is 100. Okay. Well, right now that actually wouldn't even be allowed to do this because you're at 101. Okay. So what it would do is drag the top down by 1 tick to maintain the maximum risk tolerance. As price continues to decline, every lower low that is made, the entire zone will move down, including the top of it. And the reason for that is because it cannot go beyond my maximum risk tolerance. I specified 100 ticks, right, in the example I just gave. So if it's going down and it's adapting the low side of the zone so that I'm able to get that better RBR down around 40.20, that's great, but if it doesn't drag the top down with it, my maximum risk it's superseding my maximum risk. That's not great, okay? So we want to take the entirety of the zone once it reaches our maximum risk, and it's going to drag the entire thing down. That way I know that it's never going to go beyond that anyway, okay? So that's what's happening there. If we go in and we look at this, you can see here's our RBR label, or it's printing, or printed. So it's saying RBR at 4069.50, okay? So it's ready to go. Remember, the order is submitted. We know that a couple of different ways. If I click on the label, I can see that it doesn't give me the option to submit it anymore. It says cancel, which obviously means that it's been submitted. But I don't want to do that. I'm not going to go click on labels to see, if something has been submitted or not. More importantly, we're going to have a notification here. Okay, so it's going to have some pertinent details in it as well. Although they're on the label, of course. We've discussed this. I like having. It's okay to have redundancies in certain cases, right? For informational purposes, I would rather be redundant as opposed to the opposite. Okay. So here I'm going to say E-mini S&P March contract. Understand, of course, I'm just telling you what 0323 there means. That's the March contract of 2023. Live orders will be submitted on the appearance of an RBR, and do not reload the chart. If I reload the chart right now, I'm going to lose all my calculations. Remember, I don't want to do that. So we're going to sit here, and maybe we get our fill. Okay? I do this all the time, by the way. If you have questions, I know I'm talking through so much. Maybe it's a little overwhelming. You will have access to the recording, so please don't worry. If I'm talking about something you want to go back and revisit it, all is well. I do want to just kind of touch on a couple things, though, and the way that I do that often is because I move so fast, I, in a joking manner, ask myself questions as if I'm a participant in the room, okay, as opposed to a panelist or a host or whatnot. So what I'm going to do here is I'm going to say, Will, I don't want my stop to be there, okay? What if I don't? What if that's just not where, oh, it's just too much? I want the entry up here, but I don't want the stop to be, you know, all the way down here below this structure. So for hypothetical purposes here, I'm just going to say, you know what, I don't want to use this structure for whatever, again, I could be completely, you know, what it could go under this structure as it forms, right? So I could do something like that. I could put my stop wherever I want it, but I just want to show you how the software functions so that you know the capabilities. But let's just say that if this gets filled, I want my stop to be under this tiny little new structure, okay? Again, I've just thrown it for example purposes. So right now, I may say, you know what, I want it to be down here under this structure, not this one, but this one, and then maybe I move it up here at some later point or whatever, okay? I don't really know because I don't know what all price is going to do at this time. But what I do know is I have that capability. So I can now grab that zone and watch what happens here, because this is important. Uh-oh, that's not working as intended. Why is it doing that? It is working as intended because I told it to adapt. And therefore, I expect for each new low to be accounted for. Well, if I'm moving it above that low, it's just snapping back because I told it to do that. So I would need to disable that feature, right? I don't want it to snap back. I want to be able to use to put that anywhere that I want, right? So if I leave the top as is, I can bring this over and say, you know what? Well, I think in my example I used it like this, okay? So now that's my new shaded area, and this is not going to adapt. It's never going to change. So therefore, if the RBR happens outside of this, either on the top or the bottom side, I'm not going to take that entry, okay? So again, what I could do is let's, you know, maybe wait and see if this would get filled. Perhaps it will, maybe not, who knows. But for example purposes, let's pretend, okay? Let's pretend that this went up there and filled the order. So we're currently long, you know, the market. So let me just kind of draw that in, all right? So that we'll have some visual to kind of pretend with, right? So it went up, and maybe it went down like this, and then it went up and executed that order, and maybe it's trading right there, kind of coming back down or what have you. So let's just do that. If that's the case, well then remember, I want my stop. You see how that's happening? Okay? I'm using the entry zone. If it doesn't adapt back, it defeats the purpose in the entry zone. If I don't want to use the entry zone, all I have to do is go turn it off, right? That's it. I can cancel my order, go turn the entry zone off, and then I can move this stop wherever I want it to be manually. It doesn't have to snap to anything, okay? But that being said, I absolutely do. So what I'm going to do is just pretend I'm going to go like this, right? I'm going to go, you know what? That's where I want my stop to be. Remember, this never changed. I'm willing to go take the entry as long as it happens at 4,072.50 or lower, okay? So long as it doesn't go below 40.60. So right in this area. I'm just trying to show you that that's how the software, you know, can be utilized to alter this area. Okay? And what's also great is instead of doing that, for example, I could grab, you know, each individual corner of sorts, or I can just literally move the entire thing. Okay? So now the entry is outside. So I am going to move I'm going to move that back up, right? Because that entry wouldn't take place. But that being said, I can move the entire rectangle by clicking its outline, or I can just move the corners if I want to maintain the other side. Okay. All right, excellent. So we are officially long the market, right? Now I can make all the adjustments that I want to. I can change those, the bracket order. I can move it. Like I told you, now that the order has been executed, the entry zone serves no purpose anymore, right? I mean, it's a done deal. It put my stop where I wanted it. It required the entry to take place within it, so on and so forth. So now I don't have to pretend anymore, okay? And I don't need the entry zone because it's already controlled everything I needed it to control. So now I can go like this, all right? And I can take that stop anywhere I want it. If I wanted to expand it, I could do that too. I don't, however, I want to contract it maybe. And then I could go up here and manipulate my trigger line as well as my target or targets and so on and so forth, okay? So, again, maybe something like that, or I could bring it up to just below this structure. So let's go back here. I mean, we can do this if you like, right? So let's say that I'm taking this long position, and then I want to protect that shy of arriving at this previous supply, which of course has been retested multiple times. I would expect it could potentially break. That being said, there was absolutely supply there. It turned away from it multiple times, rather significantly in fact. So, for all intents and purposes, maybe I want to protect that before I get there, okay? So again, remember, if this trigger line gets touched, this then moves to the entry plus or minus, if you're in a sell position, 2 ticks. Why 2 ticks? Well, because as you may or may not recall, in the settings, that's what I told it to do, to go beyond my entry 2 ticks. In a buy position, it's going to take the entry, add 2 ticks to it. In other terminology, it's going to go 2 ticks above it. In a sell position, it's going to take my entry, subtract 2 ticks from it. Different terminology, 2 ticks below the entry. Okay, so simply break even plus commissions by 2 ticks. Now, I need to alter my target, maybe or maybe not, depending on where I want it to be. But hypothetically, let's say, you know what, I'm going for the winner chicken dinner, right? And I just want to go way up here. Maybe price is going to travel all the way back up here to the top. So I want my stop to be way up there. Excuse me, not my stop. I apologize sincerely. What I'm saying is my target. I want my target to be way up here, but maybe shy of this general vicinity, right? So I like the 20 area. I tend to use that. Since it's way up there, okay, I could submit that I want to execute the final destination at 41.20. I could go anywhere I want to. Again, this is based on methodology and needs to be, in our opinion, very objective, but everyone's a little different. So now that I looked at my larger time frame and I know where I want that to be, all I have to do is go adjust it, right? I think, what did I say, 41.20? Okay. So now I can just drag this down to 41.20. And again, with the efficiency, I know exactly what that potential reward would be. I know how many ticks in favor it is and so on, okay? So if I wanted to do some quick, if I wanted to think to myself, how is my risk to reward? Is it intact, or, what am I looking at here? Well, number one, I have 86 ticks at risk, but yet I have 202 ticks at potential reward. So what that, just multiply 86 times 2, right? 174. Hope I didn't get that wrong. Yeah, I told you I love math, though. 172. I did get it wrong. Anyway, so 86 at a 2 to 1, right, would be 172. Am I greater than or less than or equal to that? Greater than. So, in other words, I'm well beyond a 2 to 1. So that is sufficient. That says, yep, that's very good. My risk versus reward is indeed intact, meaning now if, hypothetically I'm right 50% of the time, which means also that, of course, I'm wrong 50% of the time, which absolutely going to be wrong. Hopefully not that much, but suffice to say, I want to set myself up in a way that that is okay. So if I'm right, even 50% of the time at 2 to 1s, that's a good good risk to reward setup, right? So over time, that should pan out in my favor quite substantially. Okay. All right, so we walked through that. Let's go back while this is just kind of dilly-dallying over here. We can watch the software and the features thereof. We can go and look at many more, but this is the one that I really wanted to focus on today. So if we go back and we do a recap of yesterday, remember, I wanted to be the buyer, right? Specifically, I said I wanted to be the buyer at approximately, it's kind of a contradiction there. So let's say, just kind of say what I said yesterday, that I wanted price to be at approximately 4,050, okay, and then I was looking for, to buy the market, right? I kind of joke around, and I like to take light of things, by the way. If try to make fun of myself from time to time, that's okay. Hopefully that's eases the room and makes it a little bit more fun, right? So as you can see, what we did yesterday is we dropped down, we hit 40, 50 easily, and we dropped right into our demand level at 40, 30, 150, 40, 22 half. If we were actually looking at this in real time and it had not been touched yet, what I would of course say, and even though this is hindsight, I wouldn't have needed to say this, but I would have done it anyway, and I just want to be transparent about that. I would have combined these zones. As you probably all already know that, that's okay. But suffice to say, when the zones are overlapping as such, I don't treat this as two different zones. I simply, I will either drag this one down or drag the lower one up to be equivalent to the two zones combined together. So either way, it doesn't really matter. So I could do something like this, that hit the double X, feature of the zones here. So I could hit this double X, it's going to delete that lower zone, right? Then I can just take this one and do that. So it just looks better, for me at least, okay? All right, just looks better, that's all. Very nice. So let's see what price is going to do today. Please, again, remember the Fed decision will likely have a substantial impact on the market today, and I would just encourage everyone to be acutely aware of that. Pretty much the entirety of this day could be volatile, and the reason that I'm saying that is just looking at price action. We went straight up yesterday, followed by straight back down, right? So what that tells me is inside of this area right here, there really isn't that much to stop price from gravitating up and down quite volatile. Okay, so I would just maybe keep an eye on that. It can be a great thing, though, because for all intents and purposes, if I'm the buyer, let's say, and there's really nothing to stop me from going higher, and that's our trajectory, well, that's awesome. Conversely, if I sold high, maybe, and price is moving back to the downside fast, again, that's great. So things happening, I mean, it's not so great when they're not in our favor, right? That doesn't feel good. But when they are in our favor and it's happening fast, oh boy, it just removes those emotions, doesn't it? It makes life a lot easier when that tends to happen. So yeah, it's very nice. All right, let me say, I apologize. Let me go back. I missed a couple of questions. Okay, I got the delete template one. Excellent. Buy territory was better down in 40.31 yesterday on the dip down, but it could continue up today. Okay, yeah, so we definitely talked about this in the room yesterday, and that was, we were in agreement. So I wanted, it's ironic, right? Because, you think about price yesterday. Well, here's what we talked about in the room. Let's do a little bit of a recap, right? So a recap from yesterday, it probably poses a little bit of irony for a lot of people. Because what did you see right out of the gate yesterday? Exponential move, right? To the upside, though. It was up, not down. It was very abrupt, too. Well, the first thing pretty much that we said as we were coming into the room is hold the phone, and it's not literally the first thing. I'm just kind of going off of the general gist of things. But suffice to say, we actually talked about the sell side of the market yesterday, whereas we were coming up to an area where unexecuted orders could potentially reside, and we absolutely did not want to be the buyer. Could maybe be the seller if we wanted to go counter and whatnot, no worries. But suffice to say, we wanted price to decline, right? And it did substantially over the remainder of that day. Now, what we went further to say is that I did want to be the buyer. Okay, so this is all just based on our training and so on. This is what we do day in and day out, as you all know. But I wanted to be the buyer based on the method, or rather the methodology told me, you know, this is buy setup and so on and so forth. That's why I was just telling you what I said was below the approximately the 40-50 or just below. And at said point, I actually wanted to turn around and do the opposite. So yesterday we expected price to decline, but then hold on a minute. Where is it likely to decline to? And more importantly, can I take any action when it gets there? Right? So that's what the methodology did for me. It's just kind of holding on to that. And we'll see how things go today. I honestly don't know, because right now we are definitively into what we define as do nothing territory. That means I shouldn't be doing either buy nor sell based on our methodology right now. It's telling me don't do anything. Okay? Not what it said yesterday. Oh no, it said, hey, excuse me. It said, hey, maybe consider selling here. That's for counter trend. I prefer to be with the trend if possible, but hey, that's just my preference. So okay, sell is here, buy is here. Now we wait. So it literally took all day. It took all day, it seemed like, for that to actually happen. But eventually it did. It got down there. It just took a while. So if we go back, what I want to do right now is recap it for those scalpers, right? I am not a scalper. I don't like it. I've said this a million times. I told you all very clearly yesterday this is not what my preference is. But again, that's neither here nor there. I'm not here to to push my belief on anyone whatsoever. Belief pertaining to trading style, of course. But I'm certainly not here to push anything on anyone. But I'm also, kind of an open book with you. I just tell you how I like things, and you can take it or leave it. Both are, of course, fine. Suffice to say, this is the reason I don't like scalping. Let me break this down for you all, okay? So let's say that price starts its descent, which it did. We were in the room yesterday. And as I said then, I would wait for price to get, much lower, and then, okay, great, go ahead and begin executing. Well, it did that. And what were the price values yesterday, folks? Because was it below for the scalpers? It was below 4,100. Was that what I said? Somebody help me out real quick from yesterday. Remember, I was talking about the scalpers, and I was like, on the way down, it needs to get below a certain value. Was it 4,100, or did I know for me I said 40-50, but I'm talking about for the scalping type of thing. You guys remember? Any of you gals remember? And now we'll come back to those other questions. Yeah. Okay. All right. So we'll stick down around the. I remember you. Oh, okay, got it. Thank you so much, my good sir. So 40.80. Yes, you're right. Absolutely my observation. So below the 40.80 then. All right. So we arrive down right over here. You can see there's 4,080. And essentially I said at that point, on the scalp side, if I can look at the RBRs, I would rather be on the buy side, but me, meaning utilizing PFA methodology and executing in accordance with, I just don't want to do the scalp side. Okay, so well, what do I want to do? So I want to do the swing trading as I said before. So therefore I'm going to look at it on a little bit of a larger time frame. As a scalper, the 3-minute chart, I'm going to be in the right location, but as I continuously said yesterday, it's a rinse and repeat situation, right? I may have to do it 2 or 3 times or what have you, whereas if I just did it on a little bit of a larger time frame, I most likely could just do it maybe once and be done, right? So sure enough, yesterday, I mean, it was an excellent example of that. So once we got down, I'm going to kind of put a line on the chart at 40.80. Okay. So once we got down then to approximately 40.80 or below, you can see that we got an RBR right here. Okay. So if I were to have taken that long setup, let me do this. I'm going to delete, and so on. Okay. So if I were to have taken that long setup, I would have essentially had this much at risk, right? I think we can all agree to that. I mean, in other words, I put my entry here, I put my stop below, and I was wrong. Okay. So that's, let's call that simulated loser number one. Loser not being a derogatory term, of course, right? Just factual. So then we, of course, lose on that. It goes down, but then I get another one, right? So there it is, meaning I'm going to point to it. I don't know how well your screens, how the size of them and so on. And for recording purposes, sometimes if the audio is a little off, I like to have specific. So I'm referring to this. No, I'm sorry. I'm referring to this one right here. The next one I'm going to refer to is going to be right here, and then we can look at this one as well. But again, we're just going to move from left to right, okay? So loser number one, this one here, loser number two, this is going to be number three and or winner number one. Okay, so here we go. So we had this set up there, and then as we continuously declined, I'm going to put my rectangle around this one here. Same exact thing, okay? Nothing is changing here. What I'm doing is marking the high and the low. I'm marking the high and the low from the RBR. So I'm going to use this, and I'm going to say both of those were losers, which means that I can use the size of this for my risk to reward being intact. Earlier I said that over time, if I have 2-to-1s and I execute consistently with that, and I'm right 50% of the time, that should work out into the future very well, right? Okay, so if we look at that, though, we had those two setups. I'm not feeling very well right now, okay, because, well, I just had 2 losing trades in a row. I just am, you know, kind of disappointed in that whole situation. Hopefully I'm not frustrated, but I probably have some version of a negative emotion, right? So we want to get beyond that, try to control that, of course, or I do. But then we keep going. We say, you know what? I'm not going to let it get the better of me. I am a consistent trader. I do what my plan says. I know this hurts, but it is what it is. So I'm going to do it anyway, okay? So then we get another one here. A little bit smaller on the risk, which is even nice. However, notice what we did. Okay, so now the reward, so let's say that we closed out the position right now. Okay, just boop, we're done. So what I would have then done is I would have had a reward from the entry up to where I closed price, which is right here, right now. Okay, so I'm just going to shrink that down. Actually, I'll make it even smaller. Okay, there you go. So now we can move this off of price. All I'm trying to show is that this is the reward. So let's actually move, I'll tell you what, let's do this. Bells and whistles of the software, right? We can just turn or toggle things on and off pretty much all over the place. So we have a you know, hypothetical reward right there, but then I also, remember, I have to go back and account for my losses. So I have to take away that much, and I have to take away that, I'm trying to, there we go. I have to take away this much as well. Okay, so now what I'm left with, is it more loss or more reward? Okay, I'm left with a reward of however, you know, however many ticks and or currency value that is. Okay, so that's 3 trades in a row that we discussed yesterday that occurred. It was a rinse and repeat. It took me 3 times to get it right. Okay. Again, I don't know if I want to work that hard or not. You know, it's entirely unique perspective, if you will. Everyone has their unique perspective on how they want to do things in the markets and everything else. But for all intensive purposes, I could have done that, and especially those first two trades there, I probably have some version of a negative reaction to it, negative emotion. And then that third one, it's all of a sudden that's just magnificent, okay? Why? Well, because I just saw all that red from the previous entire day turn into green overnight and so on, and now I'm just thrilled, okay, because it's above where it was the day before and all that. So the P&L, I mean, okay. So the point that I'm making there is it can absolutely be done as such, but the smaller the time frames we go, the more setups that are going to be provided, and then I have to make that choice. Do I want to execute on all these setups? I don't know. Maybe, maybe not. But that's just a choice that has to be made. It's a lot. Scalping is quite a bit. So even if I were to scalp the market, let's say, based on the PFA methodology and all that good fun stuff, even if I were to scalp the market, I don't even know that I can call it that. I think a better term would be just day trade it, right? Because I think it depends on what people define scalp trading as. Is it getting in there and just taking out little pieces of the market, or is it based on time, or is it, what's your definition of it? I guess when I think of scalping, I think of just very tiny little profit targets or stops. I think it's just a matter of a small space in which that we have gone in, and also in addition to that, it happens really fast. But again, it's just, I guess that's my perspective on it. So I, however, would look at this as more of what I would consider a day trade of sorts, meaning why not give it the potential to go a long way? Because we looked at the chart, right? The chart is where the footprints are left, the order flow, if you will. It tells me where the abundance of order flow has or has not occurred. It tells me where things, where the buyers and sellers were predominantly fighting back or continuing to fight in the corresponding way, meaning, let's look at that with specificity, okay? So over here, you see this area right here? That tells me definitively, I'm not guessing at it, it's fact, right? So in this area, because it moves straight down vertically like that, I know that one of two things was the case, and either one of them is going to have the same outcome. Number one, there were so many sellers that the buyers never stood a chance. Even if there was a lot of buyers, there were just so many sellers continuously. Okay? So if we open that up and we look at it like so, it went straight down. How would that not be true, right? It's a fact because the buyers they couldn't stop them. They couldn't even slow them down on this corresponding time frame. So that's information that I'm now privy to. That's footprint. And again, when I say footprint, I don't mean footprint chart of sorts. There are things called footprint charts, and that has you can display order flow and actual volume and stuff on it. That's not what I'm referring to. Okay, but anyway, so we have this right here. This is a footprint, meaning just some information it left for me to be aware of. All right. So in this vertical down move, again, I know that either, number one, there were so many sellers that the buyers never stood a chance. That's useful because that tells me where the sellers most likely are, right? Right here. Number two, there may not have been that many sellers, but there were almost no buyers. Okay? Same outcome. Either way, you're going to get that vertical decline. The difference in levels, this is what I've always tried to, I mean, I even had to conceptualize this, myself, obviously beforehand, but if we look at that, that to me is the predominant reason that you cannot just go out and trade all the supply and demand levels, right? Because ultimately, all supply and demand levels is an imbalance of the buy versus the sell orders at a specific location. It either pauses long enough to form a level or it doesn't, okay? So that's truly what it is, but we know where they are and we can define them because you have to combine that with price action pattern recognition, if you will, okay? So for example, I know that right in through there, because it paused and went sideways a little bit, just kind of stuck around in this area, I know that that's a level. And the outcome of said level, in this case went straight down, I know for a fact what was stronger. In this case it was the sellers. But again, I refer back to the imbalance. Please remember that it can be one of two things, and although they will not directly impact the outcome of this level, it will absolutely impact a future turn at said level. Okay? So in the future, when we come back to this level, what I'm about to tell you will absolutely have a most likely a major impact on it. So let's talk about the level. Let's say that it was the first example, okay? Meaning that there were a ton of sellers, so many sellers in fact that the buyers just never stood a chance. Okay, well that's good because for future purposes, when we come back there, there's likely to be a lot of remaining orders that just couldn't get executed. Okay, so for future purposes, that's probably going to have a bigger impact on price stopping there and or even reversing away from it. Option number two, there were not very many sellers, but there were pretty much no buyers there, right? So again, on the corresponding level, the outcome of said level is going to be the same. Either way, you're going to go down, and you're going to go down pretty fast, right? But into the future, that sounded like a movie. Was it Back to the Future? Anyway, again, I never was meant to be a comedian, right? So in the future, if it's option number two, i.e. few sellers and almost no buyers, when we come back to that, do you think it's going to have much of an impact? Probably not, right? Probably not at all. In fact, it could even go just like straight through it. No big deal. But here's the problem. What you see right here, okay, when we're defining supply and demand levels and yada yada, etc., it looks the same. The picture, the price action, pattern recognition, and so on and so forth, it's the same picture. So how are you to distinguish between and betwixt, right? Of course, we can dive into the order flow. That's an easy answer, you may say. You may say, well, all I need to do, and by the way, all of this is built into the PFAZoneSuite, I can actually go get an exact number of volume traded here, right inside of this area. I can do that, okay? And let's say that I did that. Well, so then one may say, well, that's all you need, isn't it? Because you need to see how strong that imbalance was, and then you also need the order flow information to tell me was it option number one or option number two? Was it just that there were so many sellers there the buyers couldn't handle it, or was it there were few sellers and just no buyers? Remember, the outcome of the corresponding level is the same, but into the future, here's the problem with that. Even though I have all of this information, because we're leading to a point here, trust me when I tell you that, even if I have all of that information, one would probably think, well, if I know which one that was, option number one, option number two, and then I know how much volume was there, how much volume was traded, and so on and so forth, so I know the imbalance, I know the amount of volume, etc. How is that not enough to determine if it's going to have a reversal or a at minimum like a pause or something into the future? Wouldn't it be nice if we could predict the future? The reason is because let's talk about August, let's talk about May, June, whatever, okay? December, January, but specifically, let's go back to August. Statistically, August is a very low volume traded month, right? A lot of vacationers and stuff of such. Okay, but remember, the pictures still look the same. we have a level from August, but we're revisiting that level in December. Well, that's probably a bunch of volume because maybe everyone's expecting a Santa Claus rally and all of that. So even though I know how much volume was traded at a previous level, and even though I know how significant the imbalance was, that's the reason you cannot just go trade all the levels. Because even with that information, I cannot fight against it into the future for two reasons. Number one, I don't know how much order flow is going to definitively go up there and rebuild, but more importantly, I don't know how much has been canceled from its original state of play, right? So to simplify that, back here, let's say that there were 100,000 sellers, 50,000 buyers, okay? So we got 50,000 of the sellers executed. That means there's 50,000 left. Well, a few months later, could be days, weeks, it's relative to time, but let's say a few months later we come back to that same level. How do you know that 37,000 orders didn't get canceled because they just didn't want to trade it anymore? How do you know that? You don't. There is absolutely no way to know that. You have a little bit more information with level 2 data, so I can get a little bit more information in real time as we're coming back up to that level. In other words, the retest of it, I can tell, relatively speaking, how many orders are coming up there, right? But even if I know that information, going back to the level, there may have been 50,000 there, but I don't know how many were canceled. If we went through a rollover and contract expiration, factually speaking, they all had to be canceled, right? Now, how many of them were willing to go back and resubmit those orders? And also, how many people are willing to resubmit on the sell side when we get back there, right? Does that make sense? Once you dive into the logic of this, it's pretty straightforward as to why it's not so simple, right? Or rather, it is simple, but I should say why it's not so easy. In other words, how can I have supply levels, one works magnificently, the other one not at all, right? How is that possible? Because they look identical. Location, location, location. It's superior to any piece of the puzzle that I could ever hope for. Location, direction, altitude, etc. We combine all these. It gives us the information that I'm seeking. Tells me what I want to do. Buy, sell, both, nothing. And then I go out and I say, okay, now that I have my analysis and my information, I know that I need to consider the buy side of the market today. Would I ever take this supply level? As amazing as it looks, no. Why? Because the location, again, it's superior, but it trumps all the levels in and of themselves. So if my analysis has deemed that I want to be on the buy side today, I don't care what the supply level looks like, it's not going to likely prevail such as the demand zones would. So I would rather take a decent looking demand zone over a picture perfect supply zone because of that simple fact. And conversely, if I'm in a sell territory, I would rather take a decent supply level versus a picture perfect demand level. Okay? All right. So this is just hanging around. I got to show you that really cool feature of that. Let me go through the questions really quick, and we can certainly go through and we can submit more. We can do whatever you guys and gals like, but I certainly wanted to touch on that feature here today. One of the things that I didn't touch on is adding to the position. This is like a scaling in feature. I did mention this earlier, actually, now that I say that out loud, but I didn't touch on it too in depth. Suffice to say, when I'm in a position, I can now go add to that position, because if I want to increase or scale into, for all intents and purposes, if I were going down and I said, you know what, I want a total of 5 contracts, but I want to enter one at 40.69, another at 40.64, another at 40.60, and so on and so forth, just continuously adding on the way down. That's dollar cost averaging, as you all know. But if I wanted to do that, that's That's how I would do it. I would simply click add to position. There would be another entry label that displays on the chart, and then I can go submit that for another entry. Okay, or to add to the position. All right, let me see here. No worries, my friend. You have a great one too. Yeah, no, it's no worries. I think the timing on that actually works out really well. Yeah, it ended up, life happens. Don't worry about it. Just enjoy, and we'll do that. We'll catch up and do all that. Okay, let me go back. Let's see. Is the adapt feature part of PFA version, PFAZoneSuite, excuse me, 3.1.0.1, or is this an update that's coming? It is going to be in 3.1.02, 3.1.0.2, which hopefully will be this week. So we're moving expeditiously. Yeah. All right. Did you say that hedge icon is an add-on to PFA? I don't have it on my chart. Yeah, that's correct. That is correct. So that's what it's called, the PFA hedger, right? That secondary menu is what you're talking about? Yeah. That secondary menu is is an add-on to the PFAZoneSuite. We don't have, it's not like a bunch of add-ons or anything. But that just gives that more flexibility where it's not required, of course, right? So I can do everything that I've done today, and I never even needed that, That's a very, very, very specific feature. And, for us, it is beyond advantageous. But, again, everyone's a little bit different. I can certainly give you some use cases, if you like. Of course, for hedging purposes, if I submitted an order on, let's say I had a portfolio of equities, or maybe I was trading at Apple, whatever. It doesn't really matter. Just give an example. Or SPY, let's say, the S&P 500 ETF or something like that. So say I'm trading that, and I'm using the primary menu, and I've executed my trade over here accordingly, right? And then I want to go hedge against that, right? So now maybe I am out into the future. Let me just kind of give an example. So I got everything running on my VPS, and I go up here, and I've submitted this entry. I submitted it a month ago, and now all of a sudden Fed has made a certain decision, what have you. I believe we're going to have a downturn in the market. Well, of course I could go close the position. That's one. Or I could take a different approach. I could go here from the same chart. This is very important. I would not go to the other chart. I wouldn't do that. That's the purpose in this, because I want the information to be based on this chart, the data. Okay, so now I can go here, and I could specify. So again, this is a matter of time, but please pretend that this is, say, like a daily chart or something like that, right? And so it's been a month. We're extending the time period. You could do this for scalping too, or whatever, but let's say we extend that out. All right. And what I want to do is I want to go hedge against my position to soften any downside of the market. All right. So then I go out there and I say, okay, well, I could just do it right here, right now, or I could put it wherever I want. Okay. And when that label is touched, so I could go there now, I can read that this is going to go to the micro S&P March contract. 5 total contracts to sell, because this is going to be a short position. So then I can submit that, and if price goes up and touches that label, it's going to submit the order, but it's not going to submit it here. It's going to submit it to the micro S&P, right? So therefore, again, we call that the hedger, but it ultimately is a secondary. So that's use case number 1, and that's where, there's like a million, but that is an example, okay? That would be an example of hedging of sorts. So let's talk about another use case that I found to be pretty beneficial, and by that I'm being kind, it's very, very beneficial for myself or what have you. So if I go here and I say, I want to trade both sides of the market today. Okay. Now I'm going to base everything on location, of course, but let's say that I want to buy low and sell high, right? However, price is trading in the middle. so it's nowhere near my short side of the market where I want to sell, but it's also not close to the buy side yet. Well, what I can do is go into my settings, and instead of having this act as a hedger, I can have it act as a, just this one we call it the secondary entry menu. But instead of acting to a different or submitting to a different market, why not go into the settings, turn it to the same market, and now I can set my buy side down below. I can go to the secondary and set my sell side above, right? So I can use it on the same market. That way I don't miss one if dependent upon which way the market goes, right? What if it goes down and I had the sell order submitted but not the buy order? You get the point. But so for that way I could set my buy side. I could also set my sell side, and great, whichever one got triggered, I could go cancel the opposing side, and that way I didn't miss either of them. So that's also a use case if without hedging of sorts. That would be pretty advantageous there, right? Okay, very good. Let's see, the VIX is at 2251. Yeah, again, very low. It used to, that would have not been low, but today, yeah, very much. All right, let me see. I think you've touched on this several times, but the merge back adjusted versus non-adjusted drives me crazy. I think it drives us all crazy, yeah. Back adjusting makes the most sense to me and would show today as still being in buy territory, but I know a lot of the other platforms don't adjust. Okay, so let me give you my take on that, because I would be the opposite, right? I would say merge non-back adjusted data. So I do not do that, all right? Let me tell you what to maybe watch out for over the next. So remember, we're going to have expiration and so on and so forth. They'll evaluate the contracts, settle everything, and so on. What I would watch for is the way that the contract looks a week or two from now. So the way that I do it is using non-back adjusted data. No, we're talking about NinjaTrader's merge policy. My logical thought process there is when something happens, I don't want you to tell me that something different happens just so that the picture can look better, right? So if price turned back in the future, back in the future, there I go with this movie clip again, right? If price turned historically at, let's say, 41.80, okay, and then in the future we roll over, we go to a new contract or what have you, I don't want that to then in the future show me that it turned at 41.60, and that is definitely a possibility. So I personally prefer the use case of non-back adjusted, but again, this is where it drives us all crazy, right? Because how do you know which one to use? You really don't. I mean, ultimately, one person is going to maybe feel one way or the other, but what I found over the course of the years, in my experience, the non-back adjusted has been more, I would say, conclusively accurate. But again, that's just kind of experience and talking. I'm not backing that up with actual statistics or anything like that. But I do know I actually told you all about it fairly. I mean, it's been, I don't know. Well, I guess it had to be maybe 6 months back, because I think it was maybe 2 contracts back or whatnot. And what ended up happening was exactly that. I had an issue where the contract literally changed. It blew my mind. It blew my mind. I contacted the broker and I was like, hey, I don't think so. You're telling me that my order got filled at X price, and yet that wasn't even close to where my limit order was. So I had a big problem with it, and I had to have some conversations about it, suffice to say. And so what ended up happening is they adjusted the contract, threw things off, and so on. But anyway, it's an interesting battle. I went through at that point and started testing the back adjusted. I ended up reverting back to non-back adjusted. However, I am now acutely aware of a small window of time between rollover and expiration, where I'm very, let's just say, I'm keenly aware, sorry for the stuttering there, but keenly aware of any possible changes, and I may compare against them. So another option is to, a lot of people have other platforms, Charles Schwab, TD Ameritrade, soon to be one, or Charles Schwab, but Fidelity, blah, 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 blah. I could go on. Or you could just go out and compare against, like there's free platforms out there that you can use, of course, things like that. But another good option is just to go compare and contrast. That's what I started doing, specifically to TD Ameritrade data. And there again, I concluded that the non-back adjusted seemed more consistent. But please let me know if you found the opposite. I mean, it's an interesting conversation. I don't think I would just re-emphasize your comment there that drives me crazy, right? I mean, I think it drives us absolutely. Anyone who's aware of that probably going to drive us all crazy. But that would be a group conversation I would like to have, maybe some feedback. What do you all think? Have you noticed one is better or worse than the other, and if so, why? Things like that. Even if you want to, email that over, or if you're, if you have access, put that on the forum, whatever your thoughts are. But I would be very curious to have that conversation with a relatively large group. I think we could probably benefit from it substantially. Okay, let me keep going here. Oh, okay, great. I've already answered. Good. I must have skipped over them. How do you determine the market bias on a day-by-day basis? It's not that complicated, Nyman. But I mean, it's probably not something that I'm going to go over today, just because we've already been here for an hour and 37 minutes. And I'm not trying to sell you on or whatever. But I mean, suffice to say, that's what our curriculum and course material does. It teaches you all of that. And again, it's not rocket science. We're not trying to reinvent the wheel or anything like that. We basically use couple time frames. We use our large time frame, smaller time frame. We take into account direction, altitude, and location, right? So we determine all of that information, put it together. It tells us what side of the market we want to be on, right? So we play a game called buy, sell, nothing territory, and so on. It just helps. It's just a little game, But like I said, it keeps me on the right side, my critical thinking, if you will, on a day-to-day basis, kind of like you're asking. So I'm not trying to go around your question per se. I'm just saying it would take a little bit of time to go through. It's not a quick, not like a quick answer other than what I just gave you. I can kind of go along and give you the different data points that we look at, but for me to put it all together for you, I mean, it would take, that's the whole purpose in our program. But again, I want to make sure that you feel that I'm kind of addressing your question, right? So just remember, we take larger time frame and smaller time frame location into account, right? So that's going to be our supply demand levels, et cetera. I want to know if there's anything opposing that's going to stop me or help me advance in the corresponding direction, and so on. Then we look at the direction, altitude, and location of said direction within that. We basically take all of that and we combine it, and then it helps us to, I can then give myself an answer. I can say buy, sell, or nothing, right? Again, that's the game, buy, sell, nothing territory is what we call it, but that's what we do. All right, let me go through these real quick, and we'll kind of get out of here. Unless I have some other questions, I'll get those, and we can rock and roll. Yeah, you were just saying I've been looking at all the back adjusted or non-back adjusted, driving me crazy too. Yeah, it is. It definitely is. Again, if anyone has any further feedback on it, please, I would kindly request that you let me know. I would love to hear your opinions on that, and any actual experience that you have with it would be, it's always beneficial, right? Isn't that the purpose in a community, is to kind of help one another and things of the sort. So, all right, take a final moment. If you guys and gals would like to see me do anything real quick, please do let me know. Any use case or what have you. If however we want to. If we want to go in and resubmit an entry, if you want me to close this one out and use the entry zone however you want me to, or what have you, just let me know, and I'll do that real quick. Otherwise, we'll go ahead and conclude the session. I have mine set to merge back adjusted. This rollover because it matched other. Okay, this is very good because it matched other platforms, but it messes me up because yesterday's high wicked up to 4180 above September 13th high, but on my platform that said high, excuse me, isn't up until 4210. Ooh, so that's a 30. Yeah, that's 30 points higher. See what I'm saying? I mean, that to me is just like, oh, wow. I don't know that I can see the benefit in that. 30 points of a difference is, I don't know. That's interesting. So 4180 versus 4210. That's substantial. That's interesting. But you're saying that matches your other platforms. May I? I'm not going to say names or anything like that. Of you, I won't mention your name. Do you mind sharing what platform you compared that against? You went on further to say it still makes sense where we turned from up into that wick, but it didn't make a new high. Right. Yeah, absolutely. I can follow you there. If you don't mind, let me know what you were comparing it. I will actually go out and do that today myself. I will compare and contrast a little bit because just now that it's been brought to my attention, I always try to do that. I put in the work for you all because you put in the work for yourself. So, okay. And then again, I'm just going to kind of be quiet here and pause for just you're very welcome. Thank you so much, by the way. It's very kind of you to say. I'm going to kind of be quiet here for just a moment just to give you some time if you have an actual question that you want to take some time to type in, or if you would like audio, I'd be happy to share that or what have you. Or if there's a use case or something that you want me to do really quick, then please let me know. I'll be quiet for about 15, 20 seconds, and if I don't hear from anyone, then we'll conclude. Okay, folks, thank you. Man, thank you all so much. You guys and gals really most appreciated with your kind comments coming in. And right back at you all. Thank you all so much. Seriously, means a lot. Yeah, absolutely, Tom. I agree for sure. So, if you ever want to do audio or something like that, we've done it in the past, absolutely. Sometimes we'll have, there's maybe it's a little bit more lengthy than a comment or something like that. So we just provide audio. We have some conversations in the room. Absolutely. You let me know if you want to do it or if there's anyone else that wants to. We can do that. You said when I'm first, so someone going back, you're saying, actually, I'm confused now because I'm looking at Trading View now, and it's actually matching. It's actually matching your data. I'll have to go through a few things and see where I saw it match. Yeah, I mean, theoretically, you would see it match my data, right? But it's interesting. Yeah, TradingView, you know, TD Ameritrade, the bigger platforms, for sure, good to test against, I would say. Charles Schwab, Fidelity, you know, any of them, just go online too and maybe look directly at CME, right? You go to CME Group, things like that, yeah. Let me know what you come up with. Oh, good, yeah, no, of course, absolutely. I'm happy to do it, happy to provide it. That was very nice of you. Where the big difference was with the gap or not a couple days ago. Exactly, right? So those are that's what I'm saying. When you, so the idea of the merge back versus non-back adjusted data is, you know, does it attempt at closing those gaps and things like that? Does it attempt to adjust the data to make it all kind of flow together, et cetera? And it's a very complicated issue. I honestly, I mean, you know, I'm the first person when I just want to be clear about this, very accountable. I don't know what, you know, or how should I say that? Point is, I don't know. Okay, that's what I'm trying to just humbly tell you. I don't know why they even do it. You know, I could, you know, maybe it's interesting enough that I could contact a broker. Half the time, I mean, I don't even know. It depends on the broker and the trade desk. I mean, you all know I've had some situations to where I had to literally educate a trade desk member one time. It was very interesting because they didn't quite conceptualize how an overnight versus an intraday futures position was handled. What happens when you hold an overnight futures position and then you go into the next day and submit a day trade, open and close it, and so on and so forth, you know. And so there are things like that. But if you are going to do that, I would say maybe speak directly to the trade desk, and then I might do it as well. You know, it'd be interesting to know because I just don't. It's if anything, it's problematic because of this situation right here, where it's like controversial, right? Of sorts, because I may say, well, I think about it this way, and you may think about it a different way, and that's all fine, well, and good. But at the end of the day, I want to know why there's a difference. Why would I need non-back adjusted? Why would I need back adjusted? And once I get that answer, I think it would help to be able to give a more educated thought process. Yeah, absolutely. My audio comment referred to my audio going out, audio back on now. Okay. Oh yeah, right. Absolutely, no worries. I honestly don't even know if I saw your comment about that. Let me go back up and see. Oh yes, I do. I think I read over that because I knew that there was audio in the room. All right. So I was just kind of dilly-dallying here, playing around a little bit, just kind of showing you all how this, you know, kind of functions, etc., and letting you see the entry zone at work. One other thing that I forgot to mention is in the event that price goes down for all intensive purposes, again, it's going to adapt to that only if I have adapt on, but I can also drag. Watch what happens here. Do you see how the top of the zone is moving as well? Because in my settings, 1,000 ticks is the maximum risk. Remember what I told you earlier? It can be better but not worse, right? So watch this. So you see how it didn't affect the top? It's because it had nothing to do. I was fine. It's not even close to 1,000 ticks. But once you go beyond that maximum risk, you better hold the phone there, right? So it's going to start, no, you're going beyond the maximum risk. It starts to yell at me a little bit. But with all of that being said, even with adapt on, okay, think of it like a limit order again, I can pull below, but I cannot go above so I told it to adapt, which means take into account all of the data inside of the area from this point forward and adapt to any new low, okay, or lower, but not higher. So if I attempt to do that, it doesn't let me. You see what just happened? It said, no, hold on a minute. Again, you told me to adapt, but watch this. If I go down, no problem. So long as I don't supersede my maximum risk. Then it's going to start yelling at me again, right? So, yeah, it's doing a lot of the legwork there, you know, for me and so on. All righty, folks. This has been a lot of fun. As always, I enjoy my time with you all. And I hope that the feeling is mutual. But please reach out. Anything you need, just let us know. You can contact us through the website. I'll kind of post in. Give me just 1 second if you don't mind. There we go. Okay. So yeah, shoot us a message or what have you. And then otherwise, we'll try to get the recording out, and we will see you all soon. If you have questions, like I said, let us know. Anything pertains to the software, or if you want to get started with it, just shoot us an email. We'll help you. God bless you. Take care. And don't forget about the Fed announcement today. Bye for now.